Hello and welcome to Tax Matters. I am Chiamaka Ohaochi. It is in order to begin by wishing everybody a very Merry Christmas. In keeping with the spirit of the season, we want to make this episode as light-hearted as possible. And so we are going to bring you a rehash of the performance of our children, well, university students, if you can call them children, discussing a very important issue that will become even more important as we move into the new year. Taxation of e-commerce, or if you like, online transaction. This episode is a story of the 5th edition of the National Tax Debate organized by the Tax Club University of Lagos from Thursday the 19th to Friday the 20th of September 2019. This is a yearly event that brings together students from various universities across Nigeria to discuss challenging issues facing the country and profiling solutions to them. The debate was modeled after the American presidential debates. 4 teams made it to the finals and were represented by 1 speaker each. As if by design, the 4 speakers were equally split between the genders, 2 males, 2 females. Topic of the debate, a blueprint for the taxation of the digital economy.
A typical Saturday afternoon in my house. We see I and my siblings with our phones, surfing the internet, trying to get ourselves updated with what is happening in the world. And trust my mother now, the typical Nigerian mother, to come and interrupt us shouting. Every time you're always on your phone, Facebook, Snapchat, people will not read your book all the time. But unknown to her, what we held in our hands, what you're holding in your hands and in your bags at this very moment is the key to the global market. We sell, we buy, we close deals, we render services, we complete transactions, all without leaving a spot or meeting people physically. This is the digital economy, the new economy, the economy of the future. Now, taxation of the digital economy, as we would all agree, is a gold mine for the generation of revenue for the government. I am Pamela Ojego, a member of Team G, and I'm here to explain to you the master plan, the blueprint for the taxation of the digital economy. The digital economy is the most innovative and wildest-reaching economy in the world. In 2018, the Nigerian Investment Promotion Commission estimates that the Nigerian digital economy would generate $88 billion in revenue and create 3 million new jobs. However, Nigeria may be unable to tax this economy due to its laws, which are suited for traditional brick-and-mortar businesses, unless it amends its laws to adapt to the changing technological advancements. This blueprint is what I tag the UAA agenda, the Unification, Amendment, and Authorization agenda. Now on unification. The digital economy is a trans-jurisdictional and cross-border economy. Most companies and businesses that operate in this economy are multi-residents. Thus, to aid effective taxation of this economy, it is important that we have a unified tax law. Nigeria, being a member of the United Nations, can propose a bill on the floor of the General Assembly for the adoption of a unified tax law system for the taxation of the digital economy. Subsequently, after this bill has been signed into treaties, member nations can domesticate these treaties. The essence of this unified tax law is to prevent a case of double taxation. This proposition can also be done in the regional level under the Economic Community of West African States and the continental level under the African Union, where we now gradually work our way to the world stage under the United Nations. Now on amendments. In order for us to grow and move to the future, it is important that we are not shackled by the baggages of the past. Thus, we have to do away with aspects of our laws that are archaic and holding us back. Now, Section 13 of the Companies Income Tax Act, by implication, requires non-resident companies to have a fixed base of permanent establishment. This provision is a limiting factor, preventing the Companies Income Tax Act from effectively capturing the full scope of the modern economy. Now, it is the proposal of my government that this aspect of our laws be amended. And then we substitute the phrase fixed base for significant economic presence. As some companies, such as eBay, need not have a fixed base in Nigeria to derive income from Nigerian sources. This significant economic presence test has also been adopted in various jurisdictions, such as India and Israel. Now on authorization. There has been a staggering growth in online businesses, both in Nigeria and the world at large, through the use of social media platforms and the internet generally. We all know about Jumia, Konga, Gigi, Instablog Ninja. Now, these businesses thrive electronically, making it difficult to ensure that value-added tax are paid on these goods and services which they supply, as customers just pay the exact prices as they see on their website or on these pages. Thus, it is the proposal of my government that banks be used as agents for the collection of these taxes. Because in every transaction that goes on in the digital economy, banks are the middlemen and are in a better position to collect these taxes. Now, I would like to commend the Federal Inland Revenue Service on their recent initiative to use banks as agents for collection of value-added taxes. However, this initiative has been faced with various criticism that will lead to a plethora of lawsuits against the bank. In order for us to avoid this ugly situation, my team and I proposes that there exists a multilateral agreement between the banks, the customers, the Federal Inland Revenue Service, and the CBN. And this can be done through the amendment of the BOFIA, the Banks and Other Financial Institutions Act. In addition to this, there will be a software system in place to aid banks determine which goods or services are subject to VAT. Furthermore, on authorization, we will work hand in hand with the custom and excise authorities to make sure that goods that come into Nigeria through the seaport and the airport are properly vetted, so that we would make sure that value-added taxes have been paid on these goods before collection. It will be foolhardy on my part to fail to recognize the fact that tax evasion and tax avoidance are major culprits and stumbling blocks to the growth of taxation in Nigeria. Thus, to avoid this tax evasion and tax avoidance from crippling our economy, it is the proposal of my government that heavy fines be issued on defaulters, and we should also blacklist online businesses, using our population as a bargaining chip to ensure compliance. Before us lies a great opportunity. And with this, my blueprint, I am confident that the Nigerian economy will experience a massive inflow of revenue that will shake the world at large. Thank you.
Wow, so much adroitness. It is really getting hot, and we are sure you're wondering who among the 4 finalists has the key to taxing the digital economy, which is now being referred to as the 4th industrial revolution. As is consistent with the model, the other debaters took turns to ask questions, to which the speaker responded.
In the event that global collaboration is not possible, looking at the struggles of the OECD and the ATAF, can you provide an alternative for your first point?
There is something we should understand. Digital economy is a new economy, and every country is enthusiastic about this. Every country is just like a child on the 21st night, waiting for Santa Claus to drop a present. When I present my vision and my blueprints to the world stage, everybody will be eager to key into this. But in the event that people are not complying with this, we have the section 13 of CITA, which I talked about the amendment to capture these companies that come from countries that have not keyed into this unification agenda I made.
My question is this. You said a very salient point, that every country is passionate about digital economy and change and all of that. Now, I believe you are aware of the Continental Free Trade Area Agreement, of which Nigeria was almost among one of the last countries to sign. So now, if Nigeria poses a law, you said something about subsequent enforcement. If Nigeria poses a law on this digital economy, how is it going to enforce it on the African Union?
I did not mention anything about subsequent enforcement. I said if Nigeria proposes a bill on the floor of the General Assembly in the United Nations, subsequently member nations of the United Nations will now domesticate this law. We have about 190-something countries in the United Nations, and if they all domesticate this law this bill as signed in by the United Nations, it will create a situation where there are unified tax laws generally.
Okay, thank you. Speaking of VAT, you do realize that the nature of VAT is that it shifts the burden of taxation to the final consumer.
Yeah.
So how does that actually tax digital companies? It seems to me like it ends up taxing the final consumer, not the digital companies.
We all know that value-added tax is the tax levied on consumers. When in my blueprint, I never mentioned that value-added taxes should be made on the digital companies. I only said that the banks should be used as agents for the collection of these taxes. Value-added taxes, as we all know, are taxed on the consumers. Banks will be used to collect these taxes from these consumers, from these online companies to ensure compliance.
And from a judge.
The question that I have will relate to the practicality of using a software to capture some of these transactions through the bank. And I want you to kind of give a step-by-step approach to how this will be done. Will it be an FIRS software, or will it be the client's, meaning the bank's software, or even the customer software?
The software would be a software that is done with two people in collaboration, the FIRS and the bank. It will have both of them come together to create a software that will tax these customers. Because the FIRS can't do that on its own without the bank's aid, and the banks do not have the right or power to do that on their own. So the first step is for them to have a collaboration, an agreement that there will be a creation of a software. After the agreement, then they amend the laws. After amending the laws, then they get people in tech, people that when they pitch their proposals to, they will be able to develop these ideas. And when they develop these ideas, we practicalize it and use it to tax the digital economy. Thank you.
Now to the next speaker, the representative of Team E.
In 1990, a young man by the name of Tim Berners-Lee invented what is known as the World Wide Web, or what you and I refer to as the Internet. In that same year, the Nigerian National Assembly passed into law the Companies Income Tax Act. Now, whilst the Internet has developed into a hub for commercial activities and so much more, the same cannot be said about the evolution of Nigeria's tax laws. And it is our opinion that a tax system that does not evolve with the times can be likened to stagnant water. It will become stale, foul-smelling, and deserves to be thrown out. Ladies and gentlemen, my name is Ikinoluwa Adeadimloa, and aside from being your presidential aspirant from Team E, I will be your chief architect in today's design class, where I'll be showing you a foolproof and efficient blueprint for taxation of the digital system. Now, the digital economy encompasses all economic activity that is significantly reliant on information and communication technology. It includes e-commerce, the sale of digital services and products, social networks, and intermediation platforms. Now, according to Tom Goodwin, the emergence of a digital economy means that something big is going on. But while something big is going on the outside, something bigger must be going on in the mind of our tax authorities. Because the FIRS has reported that by 2021, the Nigerian digital economy will be worth $88 billion. However, there is no corresponding report of how they intend to potentially tax that $88 billion. This is why we've realized that the task of taxation is quite taxing. But the task of taxing the digital economy is even more taxing than that, which is why our blueprint we present to you is known as Eureka. Eureka is a term associated with the Greek inventor Archimedes to celebrate a discovery or invention. And what we have designed is something truly beautiful. Because in March 2019, the OECD reported that a bulk of businesses have said they have no problem paying tax. What they want is simplicity, certainty, and the avoidance of costly disputes. And this is what our proposal represents. So we have 4 points. To the first point, we propose source-based taxation because we believe that taxation should be done in the jurisdiction where value is created. And because users are what creates value for the data companies, tax should take place in the user's jurisdiction. This would be by reform of Section 13 of the Companies Income Tax Act, Cap C21 of the Laws of Federation of Nigeria, to erase the permanent establishment rule, which requires that a company physically perform activities in Nigeria for the purpose of taxation. What we propose is the use of significant economic presence, which means that a threshold should be created, depending on the amount of users that are reliant on these digital services, as well as the amount of revenue they are deriving from Nigeria, to state that this is enough to create a nexus for the purpose of taxation. This would also apply even to Section 10 of the Personal Income Tax Act on the 183-day rule for individuals. Secondly, we also propose that there should be a use of withholding tax, and this is very important. Because you see, when you go on those various web pages and you see those little ads pop up of Jumia and of Konga, it is because Jumia has paid companies such as Google for these advertising services, meaning that Google is deriving income from a resident company in Nigeria. However, our tax authorities do not even get a dime of this. And even when they have attempted to, they've realized that they've not been able to establish tax liability for Google. However, the erasure of permanent establishments will not just solve this, but will make sure that the Nigerian entity will have a duty to withhold tax on the payment for those online services that are given to non-resident companies. Thirdly, which I've noticed has not been addressed by a lot of my fellow aspirants, is the pertinent issue of base erosion and profit shifting. Simply put, for those who are not familiar with tax in the room, what you'd find is that a lot of companies will set up a one-floor office in a beautiful tower in Ikoyi with only 20 employees, and on paper they won't seem so profitable. And this is because they are diverting profits to their parent company sitting in a beautiful tax haven such as Luxembourg. But if you take the example of the United Kingdom, you find that you can create anti-avoidance provisions with tax at a higher rate as your regular income tax laws. Evidence can be seen at the fact that Amazon, the largest data company in the world, has been forced to comply with the United Kingdom tax law because of the fear of being taxed under the United Kingdom Diverted Profits Tax Act, which they would have fallen under if they had continued through their contrived arrangement through their Luxembourg office. And lastly, the most familiar part of digital economy for most of us, e-commerce. Now, we recognize the decision of the court in Vodacom versus FIRS to the implication that imported services of non-resident companies are subject to VAT, and which proposes an adoption of the destination principle over origin. However, the rule of interpretation of tax statutes is that tax statutes be interpreted in favor of the taxpayer. So, for us to proceed in line with this, we must reform Section 10 of the VAT Act to show this. And this is even of increased importance in the emerging cashless economy which the CBN is trying to create. More so, if ever a time comes when cryptocurrency is actually recognized, it's so important that we can pay VAT for all payments on online transactions. Now, it would be bereft of me to present you a blueprint without showing you how to administer it. Now, in May 2019, Ernst & Young has reported that the future of tax administration is digitalization, meaning we are fighting the digital economy with the digital economy. What you'd find is that in countries such as Spain, they've been able to command entities such as Airbnb to give them data on hosts on their websites, as well as those making money on the service platforms, because nobody owns the internet, people only use it as a platform. So if we have this data, and we're able to properly analyze it in this emerging era of data analytics, machine learning, and data intelligence, in line with Article 4.4 of our national tax policy, which promotes the use of technology and tax intelligence, we'll be able to follow in real time online transactions, taxpayers, as well as compare data across jurisdictions in country-by-country reporting, especially in the issue of transfer pricing, which I'm sure our judges are familiar with. As your presidential aspirant, aside from showing you a blueprint, which should give you green print, meaning revenue for our government, and showing you how to administer this blueprint, what I promise is that in this emerging era of digitalization, we would stand ahead of every other country, Africa, globally, and even in the hearts of our people. Thank you.
Fireworks! To gun, to go. As was the case with the first speaker, the other debaters took turns to ask questions of the speaker, to which he provided answers.
So my question is this. At the beginning of your presentation, you focused so much on the source jurisdiction. So do you have any plans for the resident jurisdiction, or is that going to be left?
Okay, so, sorry, what we're doing is not a replacement of the existing rule of permanent establishment, but a combination. So that we extend this rule beyond permanent establishment to significant economic presence. Now, what we propose on source jurisdiction is important because we have said that user participation is what creates value for these companies. So the source of their revenue and the source of their value is the user's jurisdiction, and as such, the user jurisdiction should be able to tax accordingly.
You made mention of significant economic presence. So I would like you to expatiate on it, and then tell us how you intend to determine when a company or an online business has significant economic presence.
Okay, I would give you the example of the European Commission. Now, the European Commission uses three factors determining their threshold: the amount of users you have from that jurisdiction, your amount of revenue globally, which for the European Commission is 750 million euros, and the amount of you generate within that jurisdiction. So the same can be replicated in Nigeria, so that we understand that you make a lot of money globally, but you also make a significant amount from Nigeria, as well as have a significant amount of users from Nigeria. So once you cross this threshold, you will then be subject to our tax laws.
Thank you. Thank you very much. So here's my question. In light of the recent AFCFTA, what do you think about your policies and the AFCTFA? Do you think it affects it in any way?
All right. So what we'd find is that whether it's with the FTCA or the ATAF or the OECD, global collaboration we concede is very relevant to taxation of the digital economy, but we cannot wait forever. So what you'd find is that double taxation treaties or even multilateral treaties would help us, because if you look at Article 24 of our model tax treaty laws, it says that the resident jurisdiction is meant to grant tax reliefs for income that has been taxed in the source jurisdiction. So if we apply this in our double tax treaties laws, such can be replicated even if it's a continental treaty or any form of multilateral treaty for the source jurisdiction.
And from it, George.
You are aware that we have a Stamp Duties Act in Nigeria that imposes a duty on documentary tax on agreements and other documents. And what we have seen in practice these days is, I'm not sure where you are aware, that there are various lenders now that provide facilities online. And then the agreement are signed online, everything is done online. So you don't no longer print agreement to sign that would have attract stamp duties. And going forward, you are going to see various instances where people are now beginning to use less and less of printing of documents that could attract stamp duties. So if you, as you said, you are a presidential candidate, if you are elected, what will you do to ensure that such agreements are taxed as part of your blueprint for the digital economy?
So even though the lazy way out would be to say that we should abolish Stamp Duties Act, what you'd find, for instance, is in legislation such as the Evidence Act is that electronic evidence is now recognized. So as such, electronic documents or electronic letters as well should be recognized for the purpose of Stamp Duties Act, so that our legislation is not just limited to physical paper such as this, but even to documents that take place online. And with our proposal and administration such that data is analyzed strategically, so we monitor all activities going on in the digital sphere, we'll be able to track these, and then with the reform of our Stamp Duties Act in line with online transactions and online quote-unquote documents, we'll be able to tax these accordingly.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC, or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers, so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
It has indeed been exciting, very, very exciting, and we are proud of our youths. Surely with these ones, our dear country, Nigeria, is destined for greatness. Because of time constraints, the debate will continue next week with the two remaining speakers. And of course, the results. Who won? Watch out for the answers on Tax Matters next week. It's hot. Thank you for watching. Have a blessed year 2020.